This is used, both of these gold and silver are used in every single sector of the global economy. Well, let's think about that. What that means is you have the broadest base of functionality and the broadest base of demand. You tell me any other asset that does that. There isn't. So you become your own central banker, right? You're going to count on them to look out for your best interest. Because if you are, I have this bridge in Brooklyn that we could discuss, right? It doesn't happen. They're not going to look for your best interest. You have to do that. But that also comes together with community, right? And the importance of community, because we are not an island. We are really all together on this planet, and coming together, we have the power, we have the strength. But yes, gold and silver in your possession maintains your ability to purchase, because this is a wealth transfer mechanism. If you have everything in fiat money, you will not be able to take advantage of the opportunities that will arise when this debt bubble it's already popped, when it becomes apparent. But there are opportunities ahead for those that are holding physical gold and silver outside of the system. Be one of them. Don't let those that are in power have all of the opportunities. Being a catalyst is the inflation and the public waking up, because these global central banks have shifted their policy and actually been accumulating gold since 2000.
Tonight, we explore a compelling and urgent narrative brought to light by financial strategist Lynette Zang. In a bold new address, Zang argues that silver investors, especially those holding physical metal, could become multimillionaires as early as 2025. Her message is not sensationalism. It's a warning and a roadmap for navigating what she believes is an approaching monetary transformation. This isn't just about precious metals. It's about a collapsing debt-based system, suppressed market prices, and a public awakening that could rewrite the rules of money. Let's break it down.
5, which I think is rather interesting because nobody noticed it until 2010. But of course, it was the crisis that made it apparent to everybody. So I think for the public, we've got more younger people that are coming into the gold and silver market, which is so inspiring to me, because it's not us old people that are going to create this revolution. It's the younger generation that will do that. So I think that's also a catalyst for silver. And, you know, silver, most undervalued metal. Look, these markets are not a place where you can get any level of good price discovery. Everything has been turned into a trade. If you think when you pay your utility bill that's actually supply and demand, think again. When you go to the grocery store and you buy your food prices, everything is being guided by traders. That's how the banks make most of their money these days, not from lending, but from trading. So I think that it'll be the inflation, because I think this year we're going to see a lot more and a lot faster inflation, and the public starts to notice it. So I think it's public buying that's going to push it, because central banks have been buying and accumulating it for a long time. But the other thing that I'd like to point out is, if it's so many people are manipulating these markets, why don't we still have $400 gold and $5 silver? So I think that is an indication of an expanding market. And that actually gives me a whole
silent gold grab. Zang starts by revealing a pattern that most investors missed. Since as far back as 2005, central banks around the world have been steadily accumulating physical gold. This movement remained largely unnoticed until the 2010 financial crisis. That's when it became clear those in charge of managing fiat currencies were quietly hedging their bets.
Both metals. I mean, you know, you look at the fundamental value, because one thing I learned from my Uncle Al, and when you're dealing with hard assets, is it always goes from undervaluation to fair valuation to overvaluation, like this continuous figure 8, right? An infinity sign. And so where are we now? We're probably right about here, still in undervaluation. And I say that if they were going to do an overnight revaluation, because that is when we will see it move toward its fundamental value. Because what gold and silver are the flip side of the fiat money, the debt-based money. So it's easy enough to go ahead and say, okay, how much debt is there in this world? And how much gold is there in this world? Even with the new gold find in China. right? Anytime you get physical, there is a finite amount, period, right? So it doesn't really matter, but you look at this and I know that gold is really worth somewhere north of $40,000 an ounce, and silver's worth somewhere north of $2,000 an ounce. So at 26, 2,700, 3,000, or at $30, it's ridiculous. Having said that, though, I think what we're headed into, and I think it's already begun, is the hyperinflationary depression. And I've looked at enough hyperinflationary circumstances, and you see that gold-silver ratio gap grow more and more narrow, but then toward the end of it, gold expands because gold is the primary currency metal. Silver is used in manufacturing as well. Gold is recoverable. Silver is a diminishing asset, gets used up. So there is really no good justifications for the prices, but I think it's public participation that will push that. And I could easily see silver. I mean, it could have happened this year too. But what you can't control is how much gold and silver is created by these contracts that do not. And
Welcome to Economy Express, your go-to destination for all things economics and finance. Whether you're an experienced investor, an inquisitive student, or just someone who wants to stay ahead in today's ever-changing economic landscape, you've come to the right place. Now, let's get into the details of our news.
They weren't stocking up on gold because it's shiny. They were positioning themselves for a breakdown in the monetary system. When those in charge of the system no longer trust the system itself, it's time for the public to take notice. Central banks aren't gambling. They're preparing. And the question Zang poses to the audience is clear. If central banks are accumulating gold, why aren't you? Fiat currency versus tangible wealth. Zang emphasizes that gold and silver represent the flip side of fiat currency. While dollars and euros can be printed endlessly, hard assets are finite. They can't be created by decree. That's why, during times of uncertainty, they outperform. They're not backed by trust. They're backed by scarcity. As inflation accelerates, your money buys less. Zang warns we're not just facing high prices, we're already living through a hyperinflationary depression. And in that kind of environment, those holding assets based on government promises are exposed. Those holding gold and silver are protected, and potentially in a position to profit. She argues that we are at the early stages of a global wealth transfer. The winners? Those holding physical metal. The losers? Those still stuck in fiat. Price suppression and market illusion. According to Zang, today's gold and silver prices are artificially low. They've been manipulated through paper contracts, financial instruments that represent metal, but do not actually require physical delivery. It's a phantom supply. She points out that if manipulation were not holding prices back, we wouldn't see gold stuck below $3,000 or silver bouncing around the $30 range. In fact, based on global debt and true supply constraints, she estimates that gold should be worth north of $40,000 an ounce. Silver? Over $2,000. Those numbers might sound extreme, but they're not pulled from thin air. They come from hard ratios, how much debt exists compared to how much gold exists. When this imbalance is corrected, it won't be slow. It could happen overnight. Silver's strategic importance. Unlike gold, silver is both a monetary metal and an industrial one. It's used in solar panels, medical technologies, electric vehicles, and more. And here's the catch. Silver is consumed in the process. Once used, it's gone. That makes it different from gold, which is almost always recycled. This means the physical supply of silver is shrinking while demand is growing. Zang calls silver the most undervalued metal in the world today. And she believes the public is beginning to catch on. Younger investors in particular are entering the space with fresh eyes. They aren't burdened by the assumptions of previous generations. They don't trust fiat. They want assets that hold real value, and silver is emerging as a cornerstone in their portfolios. Inflation as the wake-up call. Zang believes inflation will be the primary catalyst for change. Not just because prices are rising, but because inflation forces people to question the value of their money. When your grocery bill doubles, when utilities rise month after month, when the basics become harder to afford, that's when people begin searching for alternatives. That's when gold and silver re-enter the conversation. And that's already happening. She sees inflation as more than just an economic problem. It's a psychological turning point. It's when the public begins to reject the illusion of stability and starts taking action. When that wave of public buying begins in earnest, it could blow the lid off years of price suppression. Zang argues that the final push won't come from Wall Street or from the central banks. It will come from regular people, millions of them, acting independently but in the same direction. Buying silver, buying gold, rejecting the promises of fiat, and turning toward physical wealth. She describes this as a financial uprising, a grassroots movement fueled by logic, necessity, and a desire for sovereignty. As more people step outside the system itself begins to change. In her view, the market isn't just underpricing metals. It's mispricing risk. The revaluation won't be a gradual adjustment. It will be a correction, a tipping point, a massive reset that aligns gold and silver with their true fundamental value. What lies ahead? To those wondering why the shift hasn't happened yet, Zang reminds us, suppression doesn't mean permanence. It means opportunity. The longer metals remain underpriced, the greater the potential reward when the breakout arrives. She warns that the current system is unstable and unsustainable. With national debts rising, trust eroding, and inflation creeping higher, the window to prepare is narrowing. Her final message is simple. Don't wait for the headlines. Don't wait for permission. Be your own central bank. Hold physical assets. Because when the fiat system falters, and she believes it will, those holding gold and silver will not only survive, they may thrive. This is Economy Express Channel, and tonight we've taken you deep into the future of money. According to Lynette Zang, a once-in-a-generation revaluation is coming, and the smartest investors are already preparing. The accumulation of gold and silver by central banks is not a conspiracy. It's a strategy. The entrance of a new generation into hard assets is not a trend. It's a movement. And the prices we see today may be the last chance for average investors to position themselves before the reset. Thank you for joining us. Subscribe to our channel for more insights into precious metals, inflation trends, and how to protect your wealth in a world of uncertainty. This has been your Economic Bulletin from Economy Express Channel, where real value meets real analysis. Stay informed, stay protected, and as always, stay ahead.